Hello everyone. Welcome to another Market Outlook by SwissBorg. My name is Pietro, Senior Investment Analyst at SwissBorg Ventures and Investment Analyst for SwissBorg. And this week we will be covering recession fears in the sense of market shifting events. We will then be taking a look at geographically mapping volumes on crypto exchanges. And then finally, we'll take a look at stablecoins and pretty much the stablecoin wars. Starting off this week's market outlook, we will be taking a look at market shifting events. Why are we taking a look at market shifting events? It's because the state of the global economy is in a very uncertain phase. There are various different aspects of geopolitical situation and macroeconomic effects economy and that are affecting fears in the market. And we'll be touching upon some of the biggest impacting factors of those. The first to mention is elections. So why elections? Is because changes of power, changes of parliament, changes of president or prime minister can heavily affect how a country operates, what kind of legislation is implemented, and in general, the sentiment also of people in that country. So lately, the Italian elections were held. Very soon, the Brazilian elections are being held. And these two markets, of course, being very large in their geographic regions, so Brazil in South America, Italy in Europe. These, of course, then in turn will impact the economies of those regions and the sentiment of people in those countries. And that in turn, of course, will affect the uncertainty that some people may have. The second that we want to discuss is the Russian invasion of Ukraine. So Putin is really not holding back, and the developments are not getting any more positive than when this war started. The cutting of gas to Europe is also extremely concerning, and that brings us to the third point, which is the very high gas prices in Europe but worldwide, which is especially related to the Russian and Ukraine war. Of course, very high gas prices, as I previously explained, in turn affect all of goods and services around the world, because of costs of transportation, because of various other energy-related costs, and therefore that also affects the uncertainty in the markets. The fourth thing to mention, which is something that at this point I must have mentioned in pretty much every single one of my market outlooks, is inflation. Inflation fears, of course, mean that progressively your money is worth less and less. So progressively with your money, you can buy less and less goods and services. And therefore, that is also an extremely concerning factor, since inflation just keeps rising rather than decreasing. Finally, the last thing I wanted to mention is a new statistic from the Ned Davis research, which actually shows that all things considered at the moment, the potential risk of a global recession in 2023 is at a high of 98%. This 98% level has only been previously seen in two moments: the global recession in 2008 and the start of COVID in 2020, which then both, of course, led to a very severe market downturn. And therefore, this is not just a random figure. Of course, this doesn't mean that for certainty this will happen next year, but it shows a very, very high likelihood that this will happen. At the moment, we are experiencing an economic downturn, and this is already priced in, but a potential severe recession might not be priced in, and it's something that needs to be considered. The second aspect of my market outlook this week will look at geographically mapping volumes on crypto exchanges. So this is data from the block, and how the block has organized this data is that exchanges that are more prominent in certain regions will be therefore in the charts of that specific region. So let's say for Asia-based customer exchange volumes, Binance, FTX, Huobi can be seen as the more prominent exchanges in those regions, and therefore they are mapping those volumes in those regions. Therefore, the block has managed to segregate between Asian-based customer exchanges, North American-based, European-based, and South American-based. Now, in line with the start of 2022 and all of this negative influx of news, you can see that progressively the exchange volumes have been decreasing in Asian markets, in North American markets, and in European markets. And they have barely managed to stabilize, a little more in Asia than those other two, but they barely managed to stabilize in this period where we could be hitting a bottom, which is still a little bit unclear. Nonetheless, here, the very interesting outlier is actually South America. If you look at the chart from South America, with exchanges listed there as BTSE and Mercado Bitcoin, it shows that actually in August and September, the exchange volumes have skyrocketed. This shows a clear interest in crypto activity in the South American markets, crypto activity that already used to make up around 7 to 10% of all of global crypto activity. And at the moment, it's going to be making up a lot more percent of that global activity, given, as you can see, the amount of interest in the volumes on those exchanges in those regions. We will aim to give you a deeper analysis on this because it's a very, very interesting and key takeaway for this week, because we haven't yet in our market outlooks geographically mapped volumes. And to see that South America so severely outperforms the other geographical markets, it's extremely interesting, and it's something that we'll look forward to, and we'll look for new developments in the short to medium term future. Finally, this week, I wanted to close with a focus on stablecoins and stablecoin dominance. So why stablecoins? Stablecoins are an extremely interesting form of asset to not have a fluctuating asset in the crypto space, but still have your money, so your funds, stably in the crypto space, waiting for opportunities to perhaps re-enter some of your favorite tokens and some interesting new DeFi opportunities, for example. So stablecoins are extremely valuable, very relevant, and really the backbone of this entire industry in some sorts. Therefore, it's interesting also to see what has happened with stablecoins. It's interesting to look at how dominant they are in the space and which stablecoins seem to have this dominance. So as you can see from the chart below, which is tracking stablecoin volumes since the start of 2020, you can see that stablecoin interest, so volumes on exchanges on-chain, has progressively been increasing in those last 2 years. We do not see this going anywhere, and we really expect stablecoin volumes to keep increasing in line with continuously new interest in the crypto space. Therefore, it's really a matter of which stablecoins are the most prominent, which ones are the most trustworthy, and which ones function as they should, right? They keep their stability, as the name mentions, not like, for example, UST from Terra, that although it was meant to be a stablecoin, ended up not being so stable after all, right, with the events that happened. So if you look at daily transactions per stablecoin in that same period of the chart below, so therefore from the start of 2020, we can see that 3 main stablecoins make up the majority of this market. It is USDT, USDC, and DAI. So USDT used to be the clear favorite in terms of being the biggest one for volumes, for daily transactions, and for overall user interest. Nonetheless, as of late, you can see that USDC has actually progressively been passing USDT. This is very clear from the chart, and it shows really that there's, at the moment, 2 kings of stablecoin, USDT and USDC, and the rest, in terms of daily transactions, are very, very small compared to those 2 behemoths in the space. DAI is also considered a behemoth, and it absolutely is, along with, for example, BUSD, absolutely. But if we look at daily transactions and we actually look at adoption and how many people are actually trading and using those stable coins, USDC and USDT are the 2 clear favorites. And it's extremely interesting to see how USDC is slowly passing USDT. You might remember that when the situation with UST, with Terra happened, with Luna and Terra happened, that actually was USDT that then there were some concerns of its stability and whether it could maintain its peg. And therefore, that could be one of the clear decision-making factors for why USDC has actually gained so much more interest as of late. That was all for me. Thank you very much for listening, and I'll see you all next week.